Today, we're exploring a truly fascinating intersection. We are talking about the collision of traditional maritime shipping, those massive cargo vessels navigating the oceans, with cutting-edge blockchain tokenization. We're literally watching a centuries-old industry test out Web3 infrastructure to completely rewrite how massive physical assets are financed. It's an absolutely brilliant case study in modern finance, so let's just dive right in.
Okay, let's map out our journey for today. We're going to break this down into 5 quick chapters. The rise of maritime RWAs, inside Ethra's ship token, the competitive fleet, why blockchain makes sense, and finally, bridging two financial worlds.
All right, Chapter 1, the rise of maritime RWAs. So if we zoom out for a second and look at the macroeconomic picture of the crypto and digital asset market in the summer of 2026, we're seeing a really fascinating shift. While the broader cryptocurrency market might be a bit in the doldrums, investors are still fiercely hanging on to core digital asset themes. And without a doubt, one of the brightest spots right now is the tokenization of real-world assets.
To really get why this matters so much, we just have to listen to what BlackRock's CEO, Larry Fink, recently pointed out. He noted in his annual letter that tokenization could update the entire financial system's plumbing. It literally makes securities easier to issue, easier to trade, and way easier to access. This is the whole ballgame, right? It's all about opening up historically exclusive, difficult markets, like massive infrastructure and private credit, to a much broader pool of ordinary investors. But what does that actually look like in practice?
Well, let's quickly define our terms here, just so we're all on exactly the same page. A real-world asset, or RWA, is simply a blockchain-based digital token that represents a physical or traditional financial asset. So instead of just digital currencies like Bitcoin, we're talking about tying a digital token to fiat currency, or treasury bonds, real estate, or, as we're going to see today, multi-million-dollar dry bulk cargo ships. The tokens basically act as the digital representation and the distribution mechanism for that physical asset.
Which brings us to Chapter 2, inside Ethra's ship token. Let's zoom in on a specific use case, a 5-year-old Dubai-based firm called Ethra Invest. Unlike a lot of tech startups out there just desperately searching for a use case, Ethra started with real vessels and real industry experience, and then they looked to the blockchain to improve their business.
And that raises a pretty major question, doesn't it? How do you actually invest in a massive cargo ship? Seriously, historically, unless you were a giant institutional player or, a billionaire shipping magnate, you simply didn't. These are colossal, incredibly capital-intensive pieces of infrastructure. For your standard qualified investor, the barrier to entry was practically insurmountable. No way around it.
Economically speaking, investing in Ethra's maritime RWA actually resembles something you might already be pretty familiar with: a commercial real estate loan. Think about it. Just like that loan is legally secured by a physical building, Ethra's primary RWA offering is vessel-backed debt, secured by a massive dry bulk goods ship. Investors lend money to a special purpose vehicle that legally owns the ship, and in return, they purchase tokenized debt that pays them interest and repays their principal based on predetermined terms. Simple enough, right? But actually, scratch that. We need to be super precise here. Ethra is really building 2 distinct businesses on top of their shipping operations. One is that vessel finance debt business we just talked about, but the other one is a maritime data network called Seaverity. And it is incredibly important to note that Ethra's actual cryptocurrency token, which is literally called $ship, belongs to the data network. It's a utility token for maritime intelligence. It is not an investment share in a physical vessel. In fact, some experts believe this data network is the real money pot for this whole venture. So how does that token actually work in the real world? Let's walk through the mechanics of this Seaverity network real quick. First, approved contributors like seafarers and port workers submit maritime photos and reports to supplement traditional tracking data. Next, artificial intelligence organizes this massive influx of evidence. Then, token staking controller nodes step in to validate the accuracy of all that data. And finally, customers spend the SHIP token to purchase this highly valuable, validated maritime intelligence, while the contributors and validators earn it as a reward. I mean, it's a completely self-sustaining digital ecosystem. Moving on to Chapter 3, the competitive fleet. Having seen Ethra's unique debt and data approach, let's survey the rest of the competitive landscape to see how other firms are tackling maritime tokenization. Across the market right now, we're basically seeing 2 completely distinct strategies playing out. On one side, you have debt financing models from firms like Ethra in Dubai and Galactica in Singapore. On the other side, you've got fractional vessel ownership models
like London-based Shipfinex and a Greek firm aptly named Ship's Tokenization. In the fractional ownership model, investors are actually owning a literal piece of the physical ship itself. Ship's tokenization even allows for charter income to be paid directly to investors in stablecoins. And hey, if you think this is all just, theoretical tech speculation, think about this number for a second. $25 million. That represents Galactica's successful first tokenized bridge financing transaction for a massive LNG vessel back in January. And they recently closed another $1.5 million bridge loan on top of that. This absolutely proves that real institutional-grade money is already flowing confidently into maritime RWAs.
So that logically begs the question for Chapter 4. Why blockchain makes sense? Why not just use traditional databases and investment portals? Let's unpack the specific advantages here. For future-focused executives, blockchain is being viewed very similarly to AI. It's a tool meant to radically improve the efficiency of the entire ecosystem. It provides perfectly transparent ownership and transaction records. It allows for vastly more efficient distributions of interest or income. It features programmable compliance baked right into the code itself. It enables smaller investment denominations, which of course opens the door for a much wider pool of investors. And lastly, it makes transferring these assets between eligible investors far, far easier than dealing with clunky traditional paper contracts. But we do need to ground the tech hype in reality for a minute. Listen to this great point from Saeed Al-Mari, the CEO of Ethra Invest. He explicitly states that building and putting this on a blockchain does not replace the rigid legal structures, the vessel mortgage, or the charter contracts. The token isn't just some informal digital claim floating in the ether. It legally represents the rights defined in traditional offering documents. It's a technological upgrade to the distribution, sure, but definitely not a replacement of the law. And that perfectly sets up our final chapter, bridging two financial worlds. Real-world assets are forcing a really fascinating cultural exchange between two completely different types of investor mindsets. There's this huge divide that firms like Ethra are actively trying to cross. On one side, you have traditional maritime investors. They care about cash flows, strict contractual protections, security packages, loan-to-value ratios, the whole shebang. On the other side, you have crypto investors, whose primary focus is on-chain settlement, the digital assets themselves, and absolute blockchain transparency. Ethra's ultimate goal, and really the core challenge of the entire RWA movement, is to seamlessly bring these two completely different financial worlds together without causing total confusion for either side. And you know what? The wider financial world is really taking note of this exact synergy. Even major international think tanks are validating this trend. A recent paper from India's Research and Information System for Developing Countries explicitly argued that ships are the absolute perfect logical test subjects for tokenization. Why? Well, because they're highly capital-intensive, traditionally illiquid assets that boast very clear identifiable income streams. They are quite literally the ideal playground for proving what RWAs can actually do at scale. So as we wrap up our explainer today, I want to leave you with a final, slightly provocative thought to chew on. If multi-million-dollar ocean-crossing cargo ships are already being successfully tokenized, financed, and fractionalized on the blockchain today, what massive physical asset is going to be democratized next? The financial plumbing of the world is being updated right before our very eyes, and the possibilities for us as focused learners are just truly boundless.